The thing is, a lot of folks talk about S corporations, but they have no idea how the whole thing works. So in today's conversation, I want to explain to you how does an S corporation work so you have a clear idea about everything. So here's an overview I want you to pay attention to. So what is an S corporation? Let's go back to S corporation 101. The S corporation is typically preferred by small business owners instead of a C corporation. So as a corporation, it still allows the owners of a business to be protected from liabilities with some tax benefits. But S corporation is a tax designation spelled out in subchapter S of the Internal Revenue Code. So a corporation may elect S status if it meets the requirements of the subchapter. So the key characteristic of an S corporation is its pass-through tax structure, which the IRS describes as passing corporate income, losses, deductions, and credits through to shareholders for federal tax purposes. So what is the explanation here? There is no such S corporation status at your state level. If you're listening to me right now, you're thinking, listen, I'm going to go to my state authorities and file for an S corporation. It doesn't happen. S corporation is a federal tax construct. It only happens at the federal level. So you need to actually you need to incorporate a C corporation, an LLC, an LLP, and then elect S corporation status at the federal level. Okay, this is really important to really to understand that distinction here. So S corporations, C corporations, and LLCs. Let's talk about it. So new business owners must face an oft confusing set of choices around the labels S corporation, C corporation, and LLC. Now, the most important thing I want you to remember here is that when you think about S corporations, decide between establishing your business and electing among various structures and tax statuses. Remember, S corporations allow you to have a favorable tax status. You're not paying you're not paying income taxes on a few things. Okay, while corporations and LLCs are both types of legal entities, an S corporation is a tax status or a tax designation with certain added advantage and restrictions. So you have advantages and also restrictions. So to receive the subchapter S corporation tax status, you must initially have created your business as either an LLC or a corporation by filing documents with the state. So once your business has officially been formed and you have obtained a federal tax ID number, you can file actually Form 2553. I want you to look on the screen right now. You can send Form 2553 to the IRS to indicate your desire to do business as an S corporation. So this is really what it is. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let me talk to you about the approach you need to follow here. So when we talk about S corporation, there are some conditions that you need to actually fulfill before becoming an S corporation. So there is a limit of 75 to 100 shareholders in the corporations, and a husband and wife are considered to be one shareholder. So it is very usual for S corporations to have one shareholder also actually serving as the only officer and director. In other words, here you have a single member S corporation. So the same way you have a single member LLC, you can also have a single member S corporation. As a matter of fact, they don't say a single member, they say single shareholder S corporation. So you must let the count of shares of stock, you must let that shares to be public. In other words, if you want to grant shares to shareholders, this must be publicly known. And each shareholder is given a certificate based on his or her ownership value of the S corporation. And the thing is, when we talk about S corporations, everything must be public, okay? Because the IRS really places, I wouldn't say a heavy, but it's kind of like it's a pretty strict set of rules when it comes to transparency in an S corporation. Because remember, with an S corporation, you really can avail yourself of a bevy of tax advantages. So the IRS wants to make sure that you really deserve it, right? So who may be considered a shareholder in an S corporation? Individuals, for example, estates, certain trusts, certain partnerships, tax-exempt charitable organizations can also be shareholders in an S corporation, and other S corporations, provided they are the sole shareholder. So, because the IRS is really trying to avoid some kind of complicated business structures. So when people have joint, like business owners, they have joint ventures trying to really take advantage of tax benefits through S corporations. So basically, the IRS has a certain entities that cannot be considered shareholders in an S corporation. Now, the thing is that the IRS reviews applications like 2553 applications on a case-by-case basis and will decide. Boss, I want to quickly remind you of today's topic. We are having a conversation about how does an S corporation work. Let me talk to you about taxes and accounting. First of all, when we talk about S corporations and taxes, it's important to understand that the corporate tax on company profits are not paid by corporations. This is what we call the pass-through taxation concept. So the money made or lost is instead recorded on the shareholder's individual tax return at their own tax rate. So if you listen to me right now, let's say your tax rate is 20%, right? And you have an S corporation, or you are part of an S corporation. You're a member of an S corporation. If the S corporation actually, let's say, declares revenue this year, income that is, the S corporation is not paying taxes. Basically, you have to pay taxes if your effective tax rate is 25% at your individual level. You're paying 25% on that income, your share of that income, because you will receive your share of that income through something called Schedule K1. Remember, the S corporation still must file something called Form 1120S. So 1120S is actually an informational tax return. In other words, you're not paying taxes at that level. You're not paying taxes on the form, which is totally different from if you were to file Form 1120, which is a C corporation tax return. On that form, you are paying taxes. Okay, so with an S corporation, earnings and losses go through shareholders and go to their individual tax returns. This way, you are only paying taxes once. An S corporation status may be canceled by either failing to meet the conditions of eligibility, or by filing with the IRS too late after the beginning of the taxable year. If this happens, the business is then taxed as a corporation. So this is what I was just telling you earlier, that the IRS is very strict when it comes to the rules and regulations that revolve around S corporation. So if you ever are granted S corporation, be sure to comply with all rules and regulations, including reasonable compensation, taxation on time, and also when it comes to the set of rules, like things like operating agreements. You got to have that. And it's important to understand that S corporations are actually handled differently from state to state. Some states disregard S corporation status altogether and allow no tax break at all. Other states automatically do the opposite. Various states request that a state-specific form be filed in order for a company to achieve the status of an S corporation. So just talk to an attorney in your states so that you have a clear idea what happens in your state, so you're able to comply with the law. Let's talk about self-employment. So there are moments where self-employment taxes should be considered. Okay. Now, when should that happen? First of all, a lot of business owners, they actually choose the S corporation status because of tax considerations. So when self-employment taxes should be considered, if the owner or owners intend to work for the company. If you listen to me right now, if you intend to work for your S corporation, then I want you to consider right now self-employment taxes. You cannot escape that. If there is a single owner, if you are a single owner S corporation, you will actually consider self-employment taxes. We're talking about self-employment taxes, not just employment taxes, but self-employment taxes. If the S corporation is actually comprising like family members who are the owners, then also we need to talk about self-employment taxes. If you have shareholders who are friends or acquaintances, again, we are having a situation where the IRS want to have you consider self-employment taxes. If the company has no plans of going public to attract investors, again, we need to think about self-employment taxes. If you have less than 10% of owners that intend on offering consulting, accounting, engineering, law, etc. services to the public, and owners plan to take most of the profits from the company, then the IRS want to make sure that you are paying your fair share of taxes. So those are scenarios, and this list is not exhaustive, but those are like the scenarios that are most likely to trigger self-employment taxes. So let's talk about. It's really important to understand that as a corporation, when it comes to the accounting method, you can choose an accrual method and a cash method. And the cash method of accounting can be used by S corporations, which is easier than the accrual method. So according to this particular method, earnings are taxable when received and costs are deductible when issued. So this procedure allows the owner of an S corporation to remove money more simply and manage the employment taxes paid on executive salaries. Boss, I want to quickly remind you of today's topic. We are having a conversation about S corporation. How does it work? Let me give you a few pro tips. So basically, if you're listening to me right now, you got to really ask yourself, should I go with an S corporation route or C corporation route or LLC route? Well, it really depends on you, depends on your ambition as a business owner. It depends on your state. It depends on the kind of economic sector you're in. So what S corporations and LLCs have in common? Let's talk about that. The similarities LLCs and S corporations share is that they provide their owners protection from liability that is limited and are both considered pass-through tax entities. On a pass-through taxation form, the money made or lost by the business is actually shown on the personal income tax return of the owners. This special tax status prevents double taxation for LLCs and S corporations. And so this is really cool. So the benefits of incorporating a small business as an S corporation are certainly worth considering. So some benefits include tax breaks and reduced risk of liability. So the question is S corporation status right for you? I mean, it depends on your ambition, depends on your sector, it depends on your state, it depends on your personal situation. So determining if an S corporation is the best tax designation for you and your business is the first step in starting an S corporation. You'll need to carefully evaluate the pros and cons of S corporation status and make sure your business meets the IRS requirements, because there are some requirements. And so also it's important that you need to elect S corporation. If you want to elect S corporation as an LLC, you can also do that. Okay. In other words, you can be an LLC and say, you know what, I'm going to file Form 2553 with the IRS to actually elect S corporation. You can do the same thing also as a C corporation. Now we are going to actually talk in depth about how to elect S corporation as an LLC, and when to elect S corporation as an LLC, or when to elect S corporation as a C corporation. This is actually a topic for another day because we don't have a lot of time today. But we'll definitely talk about it. Let me talk to you about the steps to electing S corporation status. Okay, it's important to really understand that, as I said before, you got to first be an LLC or corporation. So the first step is form your LLC or corporation. If you do not already have a legal business entity, you will need to choose an available business name for your LLC or corporation and register with your state's business formation agency. And this is typically the Secretary of State. So this will likely require a registered agent and may require drafting articles of organization, incorporation, or additional bylaws, as well as providing a list of officers or members. And this is kind of cool. So step number 1, form your LLC or corporation. Step number 2, you want to get a federal tax ID number. So this is your EIN. So this is really easy. Go to the IRS website right now and get your EIN. It's very simple. It takes about 10 to 15 minutes. Very, very simple. The third step is you need to ensure that your existing LLC or corporation meets the requirements. So if either you have an existing corporation or LLC, or you're creating one, just make sure that you really complies with all the specific rules that the S corporation tax status wants. So in order to elect S corporation status, your LLC or corporation must not issue or have issued more than one type of stock, not have more than 100 shareholders, which may be individuals, certain trusts and estates, which may not be non-resident aliens, corporations or partnerships. In addition, your business cannot be an ineligible corporation defined as certain financial institutions, insurance companies, and domestic international sales corporations. So step number 4, you need to file S Corporation election paperwork. So I think I just spoke to you about that. This is Form 2553. Nothing very complicated. It's just a simple form. You probably saw it at the beginning of this show, where I just explained to you the fact that it's just a very simple form that you need to file, and it's called election by a small business corporation. So if you file paperwork and complete the process within 2 months and 15 days after the beginning of the current tax year, you may be able to claim S Corporation status for the current tax year. And if your election falls after this, it will be valid for the following year. And step number 5, the last step, is you need to maintain the requirements. You don't need to renew your S Corporation election each year, but you did need to make sure your business continues to meet the requirements for shareholders and stock. If it doesn't, you will need to return to C Corporation status or traditional LLC taxation structure. Let me talk to you about the specific advantages of an S Corporation, right? Because when we talk about S Corporation, obviously there are some advantages. And I want to first talk about, it's important to, you can choose S Corporation. People choose S Corporation, but why? So establishing your business as an S Corporation has many benefits, most of which revolve around tax advantages. This is the bottom line I want you to really remember here. Everything revolves around tax advantages. Some specific advantages of an S Corporation include pro rata pass-through of taxation, income, and losses. So one of the key features of an S Corporation here is that you have the pass-through taxation. So while C corporations are subject to, let's say, double taxation, right? So in other words, distributions to shareholders are taxed twice. If you have income, but you also have dividends, they're taxed twice. S corporations are not subject to corporate income tax, so distributions are only taxed once when received by shareholders. The S corporation's profit and losses are passed through to you, the owner. Number 1. Second thing is that you have tax deductible expenses and self-employment tax savings. So this means that you can write off some expenses on your tax returns, not a problem, okay? And what about self-employment tax savings? You do not have to actually file self-employment taxes in certain scenarios. Let me explain. An S corporation's business expenses are still tax deductible, meaning businesses can save big time on taxes during the year. Additionally, an S corporation can offer self-employment tax savings for LLC owners because the owners can be classified as employees. Okay, so this is where you get the advantage, you get the big benefits when it comes to self-employment. So if you're classified as an employee, you do not have to file self-employment taxes every quarter, okay? And so bottom line here is what? Electing S corporation tax status for your LLC or corporation can be fairly simple. The biggest and most important obstacle is the research and consideration of the best tax status selection for your business's needs. In other words, what makes sense for you. So it's always a great idea to talk to an experienced business accountant or lawyer or tax lawyer before you make any decision. Thank you so much for your attention. I really appreciate it. In today's conversation, I just spoke to you about S Corporation. How does it work? So I gave you the overview, the approach, taxes and accounting, pro tips, the steps. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.